I've never done a webinar before, so it would be interesting, like
Yeah.
not being able to read the faces of the participants.
Yeah, that's true actually. Okay. Yeah.
I have to ask them to, if we've got people joining, I have to ask them to react to my jokes in the chat.
Yeah, yeah. I think with the webinar, we've got a Q&A, like the specific Q&A function as well.
Okay, nice. Yeah. How many people are we expecting?
I think Julia was saying 30 to 50.
Okay, cool.
But this will be one of the core sessions. So Tuesday and Thursdays are core, and then there's some interest and like extra sessions. So I think the core ones they are mandatory for for basically those doing the internship, and in general, people on the remote program. You're meant to come to these.
Nice. So the 30 to 50, are those all at funds right now?
No, I think it's a smaller amount at funds, and then there's also people just doing the remote program.
Nice. Very cool. That's an awesome program.
Yeah, exactly. I saw you're involved with Diversity VC for a few years now.
Yeah, I was going to cover a bit of that in my intro, just if anyone was interested. But awesome. Yes, I actually met Czech, who is one of the Diversity VC co-founders at a uni event in like 2016 or something. So, and she was just kicking off the organization then. We had a really cool chat, and I just said I'd like to be involved, and the rest is history.
Yeah, no, brilliant. So you must have known Seb for a few years then as well, because he's been involved from the start.
Yeah, he's been a driving force. I think he's much more involved than I am these days. I don't know how he does it and juggles it all, but he's a rock star.
Yeah, I know for sure. Okay, everyone who's in the webinar, we're just going to give it a couple of minutes, because obviously people might be joining a bit late, so we'll kick off in 2 minutes or so. Yeah, so I was involved with Future VC, so that's how I met Seb. But then I started working for Croft, which is where he also works.
Got it. Very cool.
Yeah.
Your WeWork looks nice. Which one are you in?
It's the Marylebone one.
Oh, fancy.
Yeah, because I'm going to uni here as well at LBS. So
cool.
It's literally like next door. It's so good.
Yeah, I think we have a WeWork pass at the company I'm at right now, and I've thought about going in.
Yeah. Are you at the office or home?
No, I'm at home. I just don't have any paintings up on my wall, so it looks quite corporate.
Yeah, nice.
Let me see if my screen sharing works while everyone is joining. Oh, it says host disabled, participant screen sharing. If you could enable that, that'd be awesome.
In webinar mode, actually, let me. Do you know webinar mode where that setting is? I don't think it's on preferences. Meeting, view, show, no.
I can quickly Google it for you.
I can try and make you a co-host. Maybe let's see if that works.
Yeah, that probably will work.
Yes. Okay, try that.
Yeah.
Awesome.
It's working.
Okay, cool. I think we should get going as well, because I think attendees have it's stabilized, and yeah, we can kick off.
Okay, perfect. Well, thank you very much for having me. It's great to be here. I can't see any of you, but if you want to keep the Q&A alive in the chat, or ask me anything throughout the session, please feel free. My name's Shreya. I am covering the market sizing session, as you all know, and I put together a quick view of what we might cover today, just so you know what to expect. I'll do a quick introduction about me. I find over Zoom, it's quite nice to get to know the person behind the camera. So I've just put a bit of my background up. And if there's anything that particularly interests you about anything I've worked on, please feel free to let me know, or we can get in touch after the session as well. And then the more interesting part, content-wise, is market sizing. So I'll be covering what we mean when we say market sizing, covering a little bit of jargon that that VCs use in the industry, going through the methodology, a worked example, some tips, and then some Q&A. So hopefully that all sounds good. My presentation isn't super long, so we can either do lots of Q&A at the end if there's appetite for that, or potentially give some time back. I mean, I'll defer to you on that one.
Yeah, sure. So just a quick housekeeping point was, if you have any questions, just put them in the Q&A, function at the bottom, and then Shreya can address them as and when, depending on what you prefer to do. Okay, cool. Yeah, let's see how it goes, and we can play by ear. Cool. All right, so a little bit about my background and work life, just so you know where like my perspectives come from. So the first two kind of pictures up here are where I did internships whilst I was at university. So I did a brief banking stint at Goldman, and then worked at a VC fund in the US. And then the bottom three are places that I've worked at full time. So I spent the majority of my short career at Bain doing consulting, where I did a lot of market sizing. I did a brief kind of secondment at Hopin, which is a fast growing virtual event startup. Also did some market sizing there. And then I've just recently moved to Stripe, which is a large scale up fintech company that you might know. So if any of those experiences, when we get to the Q&A, or if you want to talk about those after, let me know. But work-wise, that's where my perspective and context comes from. And then getting to know me behind the camera, I always find it's nice to know who's talking at you. So personally, a few of my interests, I'm a big runner. So this is a picture of Phoebe when she runs in Friends, but I try not to take it very seriously like she does. I'm a big nightlife fan. I'm happy that London nightlife is coming back. And then more relevant is my diversity VC experience. So I've been part of the diversity VC team actually for the last 5 years or so. I met Czech at a university event and was just super impressed by her vision for this organization, and kind of kept in touch over the years and helped where I can. I led this research report in 2019, but it's a super impactful organization, and it's very cool to be part of the Future VC session today. And I hope you're finding it all very useful. What's my music preference? I am a big electronic music fan, like artists like Bonobo and people like that. But also like a lot of pop, like you can't beat a bit of Taylor Swift. So very varied. Okay, that's the non-interesting stuff, and we can kick off the interesting stuff with market sizing. So what do we mean when we say market sizing? Essentially, it's trying to understand how large an opportunity is for investment purposes in monetary terms. And I'll cover the second bullet point here, but it is assessing how attractive a market is for investment purposes. And when we say attractive, it's things like, is it large enough to warrant investment? Is it a growing market? Is it profitable? Those are questions that investors might want to look at when thinking about investing in a company that's playing in a certain market. The second point, which might be relevant to some of you if you're thinking about different careers, is it's often used as an interview question, very, very frequently used in consulting interviews for first rounds, and sometimes in VC interviews as well. And we'll cover a worked example, but it's often used to test how a candidate thinks, and breaking things down logically and being able to structure a problem is a desired feature of a candidate, and often what people are looking for. So it's a good interview. It's a good technique to get used to for potential interviews and on the job as well. I thought I'd cover some jargon. I don't know if the chat works, but has anyone heard of any of these terms before or know what they mean? I tried to make this interactive. I don't know if I can see the chat. Okay, yeah, we've got one here for TAM. Anyone know what SAM or SOB stands for?
no worries if not. They're very jargony words, but okay, nice. Yeah, we've got some people in the chat. Cool. So completely correct. TAM is total addressable market. SAM is serviceable addressable market. And SOM or SOM is serviceable obtainable market. And in terms of what we mean by that, TAM is looking at your total market as a whole and how big that is if you take into account all of the potential substitutes of a product that you are looking at. A nice example that I like to think of is someone once said that the TAM of Netflix is the market for attention. And so you're thinking in a super big picture way here when you're saying TAM. Your serviceable addressable market, you zoom in a little bit more and you put limitations around things like the type of business model you're looking at or your geography. And so it's how much of the market can you reach today, not necessarily how big is the market in total, but how much can you realistically reach is your serviceable addressable market. And then you zoom in a little bit more to get to a metric called SOM or SOM. Your serviceable obtainable market is how much of the market will your customers realistically buy today. And so you might take a market share assumption in terms of how much of your potential customers would actually buy your product today. It's a very like realistic, zoomed in version of a market size. And these three metrics are used quite commonly in different pitch decks when startups go to tell VCs what the potential opportunity is. They might say, okay, this is the total TAM, this is our SAM, and this is our SOM. In terms of making that a little bit more real world, this was an example from Airbnb's pitch deck in 2011 when they were thinking about the market for travel and booking travel and coming up with a super like disruptive industry, a disruptive product of being able to go and stay in kind of strangers' houses. They needed to think of this, okay, how do I define the market for this? And so they did this in a TAM, SAM, SOM way. In TAM, they said the total market is all trips booked worldwide. And that market size was about $2 billion at the time. They said our SAM, our serviceable addressable market, so when you put limitations around things like business model or the customer segment that you're looking at, they said, okay, we are competing in the space of budget travel and online trips. And when we zoom in on that market, that is coming out to about 500 million. When they zoom in again and they say their SOM, their serviceable obtainable market, how much can they realistically take today? At that time, they said around 2% of the current market is what we realistically think we can capture. And that put them at about 10 million. So that's how it kind of zooms in terms of a real world example. I don't know if there are any questions there, or we can cover them at the end if there are, but that is a real world example to think about. Okay, in terms of questions that I've been asked or kind of more real life ones that I've experienced that I'm happy to talk about. When I went into consulting, my interview question was, what is the market size of the US contact lenses industry today? And then on the job, I've been asked things like, okay, what's the market size of the UK cinema industry today when trying to justify an investor looking at a cinema chain? And then at Hopin, I was looking at the TAM for online events. We have a question here. Is SOM what they think they can capture today or what they can capture in the foreseeable future? So I think it depends really from the perspective of the founder and when you're coming up with your SOM, and it's how like early to market you are with a specific product. I think with the Airbnb example, they would be thinking about in the future, once we've got like a go-to-market plan and we've got a viable product, what do we think we can realistically capture in a year or so? And then you'd kind of model that out when you're thinking about the future. But I think it's a great question because realistically in a pitch setting, I think you'd want to present both to a potential investor. And as a potential investor, you'd want to understand where is this startup today in terms of what they can capture and where do they think they can go. So I think you'd actually want to present both, if that answers your question. But these are some of the examples that that I've worked on. And I'm actually the worked example that I'm going to go through will be breaking down this contact lenses example. Okay, some resources that you might want to have at your disposal when you're tackling market sizing questions. If you're doing this in an interview setting, unfortunately, you won't have like Google at your disposal, but it's super important to arm yourself with a very clear structure. And it's also super important to be comfortable making assumptions. When you're on the job and you have lots of resources at your disposal, those two things, being able to structure your approach and making assumptions, are also extremely important. But then you'll have other kind of resources at your disposal, like market reports, which are very useful for market sizing. Expert interviews. This is where you can go and interview people who have been in the industry, or potential customers or people that are very familiar with the industry that you are thinking about investing in to try and size the market. And another approach that's often used is actually going out and surveying potential customers and buyers. So all of these three resources, kind of, you can combine them to try and make some like realistic assumptions where you're trying to bring together lots of different sources of information. And I've used kind of all of these when trying to size markets in the past. If you're working for a big fund or a big consulting agency, often they'll have like subscriptions to market reports that you can use, and a expert network that you can tap into, and resources for you to be able to launch a survey. And bringing those all together can really kind of help refine your approach to market sizing.
Just had a question.
Yeah, go for it.
About market sizing. So, I mean, do you have any kind of rules of thumb or frameworks for how in depth you should go into a market sizing approach? Because obviously, like, all the assumptions, you can really drill deep, but I'm thinking in an interview you need to be quite concise at high level to some degree as well.
Yeah, it's a great question. I think it really depends on your constraints, to be honest. So when I was if you're in an interview setting and you have 40 minutes, I think you need to kind of make a judgment call on how detailed you can go, and mapping out your structure up front can really help. The example that we'll cover might give you a sense of making a call of, I will go this far in terms of drilling down the problem, and then present next steps as what I could do if I were to go into more detail and if I had more time. That's a good way to think about it in an interview. Same on the job, to be honest. Like, if you're looking at market sizing on the job, you might do an initial kind of V1 and say, here are some assumptions that I've had to make in the interest of time. And if we have more time, this is what I would do to get to V2 to refine the answer. So I think time is your biggest constraint.
Okay, perfect. Cheers. So yeah, it seems like structure is key, no matter what you do.
Yeah, structure is key. We've got a question here. Interested in your initial thought process when you're faced with market sizing. What do you think first? What goes through your mind before even laying out a structure? It's a great question. I'm going to get to that when we do the worked example, because I think thinking about how to structure will be more clear in a worked example, if that's okay. But first of all, I just wanted to cover kind of two approaches that we can take. So one is a top-down approach, and this is quite useful where there's lots of data available on the market. So in the Airbnb example, you could potentially Google like market size of trips booked, and then Airbnb can come along and say, okay, I'm going to assume that we'll take a 1% share of that market. So if it's 1% share of $1 billion market, great, we've got a $10 million business. That is great for data, for markets where there's lots of data available. It's a very quick approach. But actually, especially in VC, where you're dealing with companies that are like super innovative and they're making products that don't exist and they're essentially market makers, it's kind of meaningless for disruptive business models. The alternative approach is a more bottoms up approach. And this is where you kind of look at a potential population of people that would buy your product, and you make assumptions across that population. So how many times, what's their purchase frequency? How many times are they going to buy your product? How much are they willing to pay? What are the different customer segments that will buy your product? And you kind of build up all of those assumptions to build your market size. So it's a very tailored approach because you can follow through your assumptions throughout your different customer segments. If there are different buying habits according to different customer segments, like geography, for example, it is more time consuming. And when you're making assumptions and multiplying them through, sometimes errors can compound. But I will say, you kind of want to do a bit of both and sense check your answers at the end. So in examples that I've done, typically we do bottom up approaches, and then you do like a quick Google or a quick scan of market reports to do a top down approach and say, okay, has our bottom up approach and this top down approach like come out to roughly the right answer or a similar answer? That's called triangulation. And if you're way off, you might want to revisit some of your assumptions or check your initial like source data. But typically you want to combine the two approaches to like sense check your work and just see if the two approaches are coming out in a similar way, if that makes sense. Okay, the worked example that I was hoping to share is the US contact lenses example. And so I think the first question that goes through your mind, and maybe this will help to answer the question on the initial thought process, is when we say market size, we essentially mean two things. So one is how many customers are there that are willing to buy your product? And two, how many of them, or what is the value or what is the price that those customers are willing to pay? And so you've got a value on one side and volume on one side. Because when we say market size, what you're essentially trying to understand is what is the revenue that this market can generate? And revenue is price times volume. So the amount of a product sold times the price that the product is sold. So when I was first asked this question of, okay, let's size the US contact lenses market, the first thing that went through my mind is, okay, how many customers are there and what is their willingness to pay? Question, is it the price they pay retail or the share of that you as a business can get? I think when you're trying to, if you're trying to market size, you're trying to understand what like the average price in the market is. And so with that, you'd want to maybe understand like the different price segments. So there might be like a low end price range, a medium end price range, and a high end price range. And there might be different players within the market that cater to those different price brackets. When you're trying to understand how much revenue a specific player in the market can generate, that's when you think, okay, what's the price that this specific company will pay? So say it's Airbnb, for example, and they're playing in the budget space. The market that they're playing in is the budget travel space. And so they'd only take into account the budget price bracket, if that makes sense. Let me know if I've lost you anywhere or if I'm just rambling.
Just wanted to maybe like build on the question as well. So like for the market size, we're thinking about the gross, right, and not net. So it's what the customer will pay
exactly
to the end retailer and not the profit associated with that. I think that's, if that clarifies Simon's question, I'm not sure. Let us know, Simon.
Yeah, feel free to keep the chat alive. Okay, hopefully that's answered the question. I'm going to continue with this approach. So we've said market size, we're thinking about the revenue that is generated in a market. Revenue can be broken down into value times volume or price times volume. And the next step is to break those kind of buckets down and think first, okay, how many customers are there in this market? So when thinking about, okay, how many potential customers are there, the way that I approach this is from a population standpoint. And you want to break this down to like specific questions. So if you're thinking about if you're thinking about the contact lenses market, your potential customers or like your TAM is actually those that might need assistance seeing. But because that in the Netflix example, where a substitutable product is your kind of attention span, in the same way, a contact lenses wearer could choose to wear glasses, and actually they are a potential customer of yours. And the addressable market might be those that actually wear contact lenses today. So it's thinking about like your TAM versus your SAM again. But okay, if I'm thinking about the contact lenses market specifically, I want to think about, okay, how many people in the US need assistance seeing? And what portion of those people that need assistance seeing wear contact lenses? And then we also can drill down further into what the drivers are that affect those assumptions. Just checking the chat. Okay, cool. I think we're all still here. So we've got the US population, and these are good numbers to know, by the way, when you're doing market sizing, especially in interview settings. So we'll say the US population is about 320 million today. UK population is another one good to know, about 60 million. US population, 320 million. I'm going to assume that the population is uniformly distributed across age ranges, and that the life expectancy is 80 years old. This is helpful to clarify if you're in an interview setting, the assumptions that you're making. Also in a work setting, if you're coming to make different assumptions, noting them on a specific slide or somewhere in your model is very helpful. These assumptions are very useful in interviews to make the maths easy, because what you can do with 320 million and a life expectancy of 80 years old is break down your population into age brackets. And then within these age brackets, you've got 8 age brackets divided by 320. So there are 40 million people within each of these age brackets. The approach I've taken here is to look at age, because age is one of the driving forces of this market. As you get older as a customer, your eyesight deteriorates and you're more likely to need glasses. Interestingly, with age as well, there's a trend of your buying habits. I would imagine, and I'm sure there's data to back this up, but the proportion of people that wear contact lenses who need assistance seeing varies with age. So for example, I'd expect to see fewer 70 to 80-year-olds wear contact lenses if they need glasses versus your 30 to 40-year-olds. And that line of thinking is important when you're making assumptions, when you don't have data backed, or you don't have data available. Being comfortable with making some kind of hand wavy assumptions is unfortunately part of the job. Sometimes it can feel a bit uncomfortable, but where there's no data available, you have to do it. Okay, so the first step we've taken is taken the US population and broken them down into age ranges, because age is a factor that affects the volume of people in this market, or the number of customers in this market. What I then want to do is multiply within these age brackets, what proportion of the population within this age bracket need assistance seeing. And so I did the maths earlier, and hopefully we can follow this. But for simplicity's sake, I've said within the age brackets of 0 to 10 years old, 0 people need assistance seeing. And that's just like quite a bold assumption I've made, but one that I'm comfortable with to get to a somewhat sensible answer. Within the age bracket of 11 to 20-year-olds, I've said roughly 1 in 5 of those will need assistance seeing. So 20% times the size of that age bracket, the 40 million, gets you to 8 million. And what you'll notice is as I go up this age bracket, the proportion of people that need assistance seeing increases. So again, you're thinking about those trends in this market. And so we go up to maybe 80% is a bit bold, but we'll say 80% of people within the age bracket of 70 to 80-year-olds need assistance seeing. And so that's the first step I've taken. Then the second step to get to what your kind of attainable market is in terms of contact lenses wearers, you want to take a portion of the people that need assistance seeing and say how many of those are going to choose to wear contact lenses. And so we'll do this kind of assumption logic again, which I've flown through. And we say, okay, we'll ignore this first age bracket again. But of the 8 million in the 10 to 20-year-olds that need assistance seeing, I'm going to say 1 in 5 of those choose to wear contact lenses. So I'm taking 20% of this 8 million. And we flow that through again. The assumptions change a little bit here. I say about half of people that are 20 to 30-year-olds who need assistance seeing choose to wear contact lenses. So that's half of this 12 million, which gets to 6 million. And I apply that logic through again and run it through the age brackets. When I sum up across the age groups, the proportion of people that choose to wear contact lenses, I get to about 40 million. And you might want to sense check that and say, okay, 40 million out of the US population, does that sound about right? It feels comfortable to me. I think it's about an eighth. So that is the approach I've taken for how many customers are there in this market. Hopefully we followed that. The next step then is to think about what the willingness to pay or the potential price of this market is. And we could do a very detailed version of that. Again, kind of what we were talking about before, it really depends on how much time you have. Say we've got 40 million customers. What's useful is to think about like the business model here. In contact lenses, you can have a subscription where they're sent to your house every month. And so for simplicity's sake, if we say that's $20 per pack per month, there are 12 months in a year, we say $20, 12 months in a year, times the 40 million potential customers, we get to a market size of about $10 billion. Okay, we've got someone that guessed 8 billion, nice. And that's a great thing to do, is to kind of sense check that, like reading things like TechCrunch and like keeping up to date on what's going on in different markets and being familiar with like how big these numbers are. I think for a very long time before I joined consulting, I had no idea what 10 billion meant in monetary terms. And so keeping up to date with like startups that are raising at this valuation can help often like sense check your work. If I was getting to a number that was like 5 trillion here, that should raise a red flag, like that's too big. And so just taking a step back once you've got an initial answer is a good thing to do. I said that there's always kind of more that you can do here, and that was to Aman's point as well. Thinking about like, what assumptions are you super sensitive to in this scenario? Well, we were really sensitive to the portion of people within the different age ranges. And so I'd probably want to verify those with some data if available. But also this was a very like hand wavy assumption I made with like this $20 mark. And actually what you could choose to do is segment the price component as well. We could do a price segmentation, like I mentioned before, where we say, okay, there's a low end of the market, there's a medium end of the market, and there's a premium end of the market, and the price changes according to those different buckets. And then we can put a number of customers into those different buckets to then back into a more precise market size. Another way that we could segment the value proposition is by type of product. If there are different types of contact lenses in the industry, like your daily disposables versus reusables, if the price changes according to the product, again, you can think about, okay, how many of my customers would choose to buy this type of product versus that type of product, and does the price change? Yes, Catherine, I will share the slides. So a couple of tips that I've just mentioned, and a few things that I did there that are very repeatable. There's kind of like a repeatable process to all of this, is first think about the business model and think about the different revenue streams in the market that you're considering. So I mentioned the cinema example before, is a market that I sized for a consulting project. And you might think that, okay, think about how does a cinema make money? Actually, there are 3 revenue streams, and I hadn't thought of this before. But when you're thinking about a cinema chain, they make money through selling tickets. They make money from showing adverts of different products, the trailers, and they make money through selling like things like popcorn and drinks, retail. And so making sure you understand the business model of like, okay, how does this company actually make money is really important for market sizing, to make sure you don't ignore a potential revenue stream. So understanding the business model is a good thing to think about when you're first approaching market sizing. Structuring the approach as we did. So think about, okay, what does market sizing mean? It means how much revenue is being generated in a market. Revenue is nearly always value times volume. What is the price? How many customers are there? And you times the two together. And you can drill that down into different segments to get to a more refined answer. That's nearly something you can always do. To an extent where there is data not super readily available, you have to be comfortable making assumptions. But where there is data available, using those to flow your assumptions through and refining those assumptions as you go is helpful. Another tip that I have is, where appropriate, you can range and look at potentially like different scenarios. So this is very interesting in a VC setting where you're thinking about super like disruptive technologies, and you're thinking 5 years into the future, maybe, setting like a high case scenario versus a base case. So if I think about something like, say you have like a crypto startup, and everyone's talking about crypto right now, you might want to say, okay, let's think about this market in 10 years time. A high case scenario is that crypto has become a very highly adopted form of payment in the population. That's maybe your high case scenario. Your base case scenario, you might be assuming that crypto adoption stays roughly where it is at today, which is somewhat low. But presenting 2 or multiple scenarios gives an investor kind of, it might depend on the different worlds that we live in 10 years time, and shows that investor the way that you're thinking about this market. And then the last thing is to sense check. So exactly as we were doing before, once you've got an initial answer, thinking about, okay, if I've got an initial answer for my number of customers, what percentage of that population is that coming out to be? Once you've got an initial answer for the size of the market, putting that into context of a market size that you're familiar with or something that you read about recently, just doing that quick sense check of, am I out by a factor of like, I don't know, 100, or out by a factor of 10? Am I roughly in the ballpark that I'd expecting to be in? If you don't have data available, that's a helpful thing to do. The other thing that we touched on before was triangulation. And so a couple of other methods that you can triangulate is, if you're thinking about a market size, summing up all of the revenue of the different players in the market. So say you are trying to think about the market size of aeroplane manufacturers. That's basically a duopoly. You've got 2 players, you've got Airbus and Boeing, and the revenue of those 2 companies is essentially a market size. That can be done where you don't have that many players in the space, but is a approach that I've taken in the cinema example. Actually, it's one of the things we did. So we looked at the market size from a report like generated standpoint, and then we also summed up all of the cinema chains and the revenues available in the UK to triangulate those sources. Using available data to test different approaches is what I mentioned, so market reports, and then comparing to a bottom-up approach. And then also a quick Google, never hurt anyone. So when I did that contact lens example, I think I did a quick Google and it was coming out of like 11 billion in 2027. So maybe I was on the higher side. Some of my assumptions might have been a bit bold, but I was roughly in the right ballpark, which is good. Cool. What time did we start? 5:30. So maybe if anyone has any questions on anything that I've touched on or any of my experience, I don't have a huge amount of experience, but any of my experience, feel free to ask. And then I will share the slides after this session. I mean, I can give my email out as well if that's helpful, and anyone can get in touch with me on, social media or whatever.
Awesome. I think we had a few questions come through the chat. I can I can relay them and then we can do it that way.
Yes, sorry, I hadn't scrolled, so I hadn't seen these as I was going. Should we take them one by one?
Yeah, absolutely. I mean, we can do them in order. So we've got a nice, I think, 4 questions so far.
Cool.
So Vivica asks, so how do you come up with the assumptions that you're so comfortable and confident with? I'm thinking in an interview context, especially.
Yeah. If we go back to these assumptions, so I think, especially in an interview situation, they're not looking for, have you specifically calculated the exact amount of people in the 50 to 60 age bracket who choose to wear contact lenses. I think in an interview setting, what they're really looking for is your approach and your logic. I can say that very confidently for consulting. I've done consulting interviews before, and also in VCs, right? Like VC, I think especially in the VC space where you're looking at industries that don't have a lot of data available, you have to apply some amount of kind of logic and common sense to make these assumptions. And I think you get better at them with practice. So, you could just take any random product, like I have a glass next to me and think about a drinking glass next to me and think about, okay, if I'm trying to size the drinking glass market, where would I start? And kind of then going away and Googling the answer and thinking, okay, where my assumptions might have been off is helpful. I think it comes with practice, and then I think there's a bit of common sense that comes with it as well. But I would say in an interview scenario, it's less about whether you get exactly the right answer to like 1 decimal place, and much more about your logic, and taking a step back and also like questioning your assumptions is quite helpful in making it more of a conversation with the interviewer and being very upfront about where you've made assumptions. So at the start of this example, I said very clearly, I'm going to assume that the population is uniformly distributed. I'm going to assume that the life expectancy of a person is 80 years old. And then these assumptions here are potentially more of a discussion point because you're very sensitive to those. And that can be a discussion you have with the interviewer. Say, okay, I'm going to assume this upward trend in the population of as you get older, you are more likely to need assistance seeing. And stepping back, I mean, maybe these assumptions could be a bit more refined. Like it's probably not 4 out of 5 70 to 80-year-olds that need assistance seeing. And taking a step back and thinking, okay, does that sound logical? That can also be a conversation that you have with the interviewer to say, to be very like quick and approximate. This is the approach I've taken. With next steps, I would want to refine X, Y, Z. If that answers your question.
Yeah, no, that's great. I think it definitely makes sense. Like instead of thinking that this particular segment has 6.7% adoption and all of that, it's much more about, is this a big enough market to go after? And you can quickly, rules of thumb, like 1 in 2 people, 20 to 30, that can help you get to that answer that this is a multi-billion market.
Yeah. I think it's much more difficult when you're thinking of a very new technology, and that's where you want to rely on like the experts in that industry to make assumptions. That's not in an interview setting, but more on the job in VCs, you'd want to go away and do like expert interviews with people that are familiar with the industry to say like, okay, I have a startup here that's saying X. Is that valid with what other people in the industry are saying.
Yeah, no, that makes sense. So I mean, the next one, again, related to interviews, from Tej. He asked, would you recognize factors such as laser surgery reducing the SAM? And could you tier the pricing? I think he touched on tiered pricing and finding the kind of average.
Yeah. I mean, I think that's a great point, and on recognizing the fact that you're thinking like that is a great sign. I think I said somewhere that you'd want to think about the drivers that affect your assumptions. So that's not one that I brought up, but 100%, like I just thought about the two options of either if you need assistant seeing, you either wear glasses or you wear contact lenses, but actually throwing in a third trend of maybe there are more people that are moving to laser eye surgery, that actually reduces your SAM. And I don't think it's a huge factor, but it 100% would be worth mentioning. And it just shows that commercial awareness and that you're thinking about this deeply, which is a great sign. And yes, absolutely, you could tier the pricing in the interest of time. I didn't do that here, but it's something you could suggest as a next step in an interview, and 100% on the job, you'd want to go quite deep and do quite like a detailed pricing model potentially.
Awesome. Yeah, I think I just want to actually touch on something related to this. So, because you've done quite a lot of consulting, but also VC, and now working for scale-ups and startups, like, could you maybe just summarize some of the nuances in market sizing and sort of valuation when it comes to consulting versus VC? I mean, what comes to mind for me is in VC, I suppose, making investment, it's a long-term view. So yeah, maybe just because the SAM in the immediate year might not look so great, but you're more thinking, can this team really take a good chunk of this market over like 5, 7, 10 years? Yeah. But feel free to touch on what you think are some nuances, because obviously this is a VC focused cohort.
Yeah, exactly. I think the difference is exactly as you said. So investors from a consulting perspective. So I did a lot of private equity kind of work when I was in consulting, and they want to think about typically a 5-year horizon, and I'd say they're less risk. They have less risk appetite. Versus in VC, yes, absolutely, you're thinking about a long-term time horizon and potentially higher risk appetite. Like one in 10 of your investments might win, but they'll come out to having a 10x return. And so that's where the kind of high case, low case, or like base case scenario modeling is helpful in VC, because you are thinking very far into the future where you're dealing with trends that are unknown, and being able to flex those assumptions and flex to certain trends in a potential market sizing model is very helpful. Yeah, like I think not perfect, but a great market sizing model might have like a little Excel tab that you can like tweak all of your assumptions and have different scenarios. So your potential investor could think, okay, this is my view of the market and my view on where the trends are going. When I input that into this model, what does it look like? Does that make sense?
Yeah, no, thanks so much, Ria. I mean, there's a few more in the chat. So like one is the market size that we calculated for contact lenses. That would be, is that the SAM or the TAM in this case?
That would be the SAM. The TAM would probably include the glasses market, because that would be your total addressable market. You could also address the glasses consumer as a contact lenses manufacturer, but just limiting it to your product would be your SAM. And so the one we did was the SAM, because we excluded the revenue from glasses.
Perfect. Okay. And is it the revenues or the valuation of the companies on the public market? Because some can have higher multiples than others.
So it would be the revenue of a company, not the valuation of a company, because the valuation, as you say, is affected by multiples, but it's not actually generating revenue. And so you'd want to, so if I think about like the market for smartphones, for example, I'd want to take the revenue that Apple is making from smartphones, from iPhones, rather than as an input potentially. And plus like the revenue that Samsung is making from their phones and some of all of the different smartphones manufacturers, that's one view I could take. I would not include the valuation of Apple as a company, if that makes sense, because that, as you say, is inflated by the market multiples.
Awesome. Okay, so Jan says, great presentation, thanks so much. My question is, often in pitch decks, you see very high TAM numbers, Y Combinator approach. What's your best approach for quickly identifying how much such numbers can be trusted? And are you asking for their assumptions as a VC?
Yeah, that's a great question. I was telling a friend who works in VC that I was doing this presentation and said, oh, have you got any tips? And they said, that's exactly what you said, like, watch out for crazy TAMs, because like there's an interesting thing happening in the UK right now with delivery food startups. I don't know if you've seen players like Getir and Gorillas, all of these apps that are looking to deliver groceries immediately. And my friend was saying, they say the TAM of a grocery delivery startup is the entire food industry, which is a completely like trillion dollar market, including the agricultural growers of like onions, and that doesn't really fit with the market definition of a grocery food chain. So at some point you'd want to completely, as you say, ask, what are you assuming here? How are you defining the TAM? And potentially make a call like, I don't actually think what you're including in addressable is actually addressable, and I'd want to tweak that and bring that down a little bit. And so I think, yeah, exactly as you say, I'd want to ask very quickly, what are you assuming in your TAM? And then as an investor, you can say, okay, I think that's sensible or not.
Awesome. Okay. So the next one from Vivica. So would you be able to give an example involving the replacement rate? For example, taking the contact lens market, if we focus on contact lenses that are reusable a couple of times.
Yeah, 100%. So if I go back, where will it be? So what I did here, oh, sorry, I'm getting lost. Okay, what I did here was say, you have a replacement rate here of 12 times, as in you buy the product 12 times a month, 12 times a year. And so that's where things like replacement rate would come into. It would be a baked in assumption of how much you pay for the product, how often you pay for the product, and how many people pay for the product. So that's a great point, because I didn't touch on that as detailed as I could. But yeah, where you have a disposable product that, like a subscription, not a disposable product, where you have a product with a replacement rate with an recurring amount of revenue, you'd want to bake that into the market size and pricing element.
Yeah. Okay, awesome. And from Vivica again, so I'm guessing the 10 billion market in the end, is the TAM, as we said, or we said it's the SAM?
We said this is the SAM actually, because we're not including the glasses market. And then how do you assess what percentage of the market your business would realistically be able to capture? That's where you'd maybe want to go and like talk to people in the industry and say, this is the type of product that is potentially being offered. What if you surveyed 100 people, how many of those people would be interested in buying your product? And I imagine that's what the likes of Airbnb did in 2011 when they were coming with their pitch deck. They kind of presented their idea to different people, and with data came up with that like 2% assumption. So and that's what I did in a lot of consulting as well, where it was like maybe a new product or a new type of product for a company. You'd want to go and interview the industry and say, okay, this is thinking about being launched. What are some assumptions for what the appetite for purchase is in that market? If that makes sense.
Cool. Yeah. I mean, this question, I think we touched on the nuances between VCs and consulting firms for market sizing. Um,
Yeah,
so that's great.
yeah,
And then yeah,
VCs slightly more risk appetite, thinking about long term in the future, and so having more scenarios modeled into VCs market sizing is probably a main difference.
yeah. And Tej asked something in the chat. So could you recommend any resources where we can find more market sizing questions, examples and answers?
Yes. So I know the consulting resources. There's two good books, one called Case in Point, and two is called Case Secrets by Victor Cheng. Those have loads of market sizing examples in there. And what I do is read the question, do not look at the answer, come up with your own approach first, and then look at like the model answer and see where your assumptions differ. And that's how you can get better at like being comfortable with making assumptions. And also map out your initial structure and try not to look at the model answer for that, because that is a really key thing to be able to practice, like how you segment this market, how you break down this market into bite-sized chunks.
Okay, perfect. I think I've actually got a question which I'm personally interested in. It might be relevant to the rest of us as well. So I saw that you did like VC an internship, I think, before consulting, and then decided to do consulting anyway after. So
yeah,
like what would you advise that as like a good path to go into something like consulting first, which is quite general, and then go into VC after? Or would you say go for VC straight away?
So I think it's quite rare that as a grad you can find a VC job. It's a super competitive industry. It's very black box, and that's why diversity VC exists, right? Because we want to increase access to the industry and make it easier. I think at the time when I was looking for jobs coming out of university, I was interested in VC but didn't know that much about it and wanted the broadest experience that I could get and work out what excited me and what I found interesting. And so consulting gave me that broad look at everything. It also keeps a lot of doors open, I would say. And the move from consulting to VC is quite well trodden. The move from banking to VC is also well trodden. And so if banking or consulting is something you're interested in, but also want to keep the door open for VC in the future, it's something you could go down. But I will say that speaking to people in VC now, I think as diversity VC has kind of gained traction, VCs are looking for all types of backgrounds now. And so I don't think there's like a perfect path to say, okay, I'm going to do banking and then I'm going to do consulting and then I'm going to do VC. I'd just say focus on what you're interested in, which is what I'm doing at the moment. And I hope that will keep the door for VC open in the future. It's something that I potentially plan to do in the long run. But my approach at the moment, or my approach has been, let me get a really broad training from consulting. Now I'm getting a bit of operating experience at a large scale up. And if I'm still interested in VC in a couple of years, maybe they'll have me.
Yeah, no, it sounds great. It sounds like a great plan. But yeah, thank you so much, Ria. We've got a minute left within the initial hour. So, I mean, any closing remarks and any final questions, just get them. Oh, actually,
there's one from Vivica, I think.
We had a big one come in. Yeah, cool. I mean, we can address this one as the last one then.
Yeah, so on a more personal career side, you've quite an interesting journey from IB to VC, consulting to scale up. For people interested in entrepreneurship, company building, who would want to try their hand in the corporate world before venturing out on their own, would you advise in going into VC or going to the digital side of consulting? Interested in company building, but want to try their hand at the corporate world. I think it depends on what type of entrepreneurship you're thinking about doing. Like if you're thinking about launching a consumer product, getting consulting experience and learning about how consumer products work could be very helpful. versus if you're thinking about only like a digital product, maybe you would want to specialize in joining the digital arm of the consulting industry. From an interest perspective, I think, oh, sorry, I'm not fully answering your question. You say, would you advise into going to VC or going into the digital side of consulting industry? Look, I don't really think there's a right answer here. I think both could offer really great learnings for entrepreneurship. Yeah, I've seen both. I've seen VCs go into entrepreneurship, and I've seen consulting friends move into entrepreneurship. Yeah, I don't think that's the right answer. I'm slightly biased on the consulting side just because I think it does give you a very broad range of experience, and you see a lot of different things. But I also haven't spent, that's where I've spent the majority of my career, so that's where my bias comes from there. But yeah, feel free to, you can ping me after on like Twitter or LinkedIn or whatever if you want to chat about that in more detail.
Yeah, you can also check out like the talent accelerators as well, like Entrepreneur First or going to Antler or something where, you know, they'll kind of help you get off the ground if you're thinking about entrepreneurship.
Yeah, definitely. Those accelerators are awesome.
Brilliant. Well, thank you, Shreya. We're time for now, but yeah, as you said, if anyone has any more questions, you can ping Shreya and get in touch. But yeah, thank you so much. It's been a great session.
Awesome. Yeah, it was great to see everyone. Thank you for making this lively. And I'll send the slides to you, Armin, so you can share them with everyone.
Awesome. Yeah, I'll do that.
Cool. Well, okay. Great to meet everyone. Thanks so much.
Yeah, great to meet you. Have a good evening.
Bye-bye. You too.
Cool. See you later, everyone. Thanks.